Okay, so just now, the time is 12:01. You have a three candle pattern here. Now this is a terrible setup. Why? Again, you have the three candle fractal pattern occur. That's good. You have it happening and spiking a PDarray. This is a PDarray. We have a high, a low, a higher high. You have the order block and you have the breaker block. All in here, and this line here is the mean threshold of that order block. Okay, it spiked it. But look here, the third candle has struck a PDarray. Right here. We have total all the way from here. We have this here, order block here. And we have price come slam into that right here. Slammed into that. Right there at the top. Comes up, creates this W. Boom. Breaks this high here. Comes down into this order block. You see? Or you can say it slammed into this breaker block. You know, just up close here, down, then went up. Right here is a mitigation block actually, because it's a low, a high, a higher low. That makes this here a mitigation block. But it's also a bullish order block here, and price struck it and went up. Okay, so up here we do have a order block, and we have this here SIBI, and it came up, filled it, it came down, slammed into this here, it came up, slammed into this, and now made it three candle pattern. So the distance from an entry here, even though this already struck it, that's like here, look, 1, 2, 3. So imagine if I would have waited for this to come up here, you know, more than likely what happened when this popped out, it dropped down a bit and then rose up. Imagine if I'm sitting here getting in on the pullback for the sell, and this third candle just banged into this. So it can be on its way up and continuing up to go deep, run deeper into this order block. You see? So that's exactly what's happening now. 1, 2, 3, this third candle hit the top of the order block. So this is not this is not something to get into. It can go either way, and this is gambling, and we're not in the business of gambling. This would straight up be gambling, to see if it happens. So just for seeing what how things play out, let's do the work. Okay, let's just say this PDarray was further down. It was distance, between, and this didn't hit it. Let's say this was further down. There was some distance, some range to go. Let's make believe this didn't hit this. And so how will we do it? It just occurred. It's 5 minutes in the past. Let's drop this line here. You see the time, 6. But also it's 12 midnight. This is not the kill zone time. But just looking at structure and just seeing how we would play this if we were expecting to sell after a pullback. All right, so let's now go to the 15, and we just want to encompass the that third candle. So that's for the hourly 6:45 right there. So I would drop the fib, which big possibility to pull back already occurred. Okay, right here within there. Which would be nice actually. You can press it, come and take this little. Oh wait, I that looks. Yep. You have this little fractal here. Price could come up, clear the high here, and then just drop. Now I'm noticing what may be a right here. This might have been an institutional. No, it didn't clear. It didn't go, clear certain areas and stuff. But I'm wondering if this was an institutional order flow entry drill right there. But price did come up in there past equilibrium. Looks like 62, and that's that. So now that's 645. Okay, so I'm gonna go down to the 5-minute chart, and 645. $55 right there. Okay, so this is the whole 5-minute right there one. And yeah, so that's a nice could have been a nice setup, but yeah, price didn't go down below here. In fact, see how deep it came into this order block? So this is, to me, this is a failed order block. It failed just because of how deep it came into it. Yeah. So although this is, again, price had already came down and hit, structures and stuff, I wouldn't go for it, but to be honest, because price came down so deep into this here, I would have the mind that this is going to sell. It has this here, this busy here, fill in all this stuff here. So so in any event, let's take a look at this here. Let's fine tune the fib. So we have, okay, so a little imbalance here, and this is not, and it's over. We have a little space in between there. Pretty ugly. It's pretty ugly. And it's doji. Pretty messy too. I mean, this is really messy. All these gaps here. So the most part, I would have it coming up to here. Maybe coming back up to the main threshold roundabouts. come back up and see if, okay. Oh yeah, it would just it'll be about here. Yeah, if things ever look ugly on the lower time frame, go up a level. M15 minus order block. And yeah, let's leave it like that. So we'll go back to M5 and that's it there. We have this doji here which may be ignored and it may come up and just fill into this area here and then drop. So I'm going to enter a position there. Basically 10. Oh, this is yeah. I mean, it's so close to this big number here. So it's 10 there and okay, this another thing we can do is we can look for any divergences. I will look for divergences on the higher time frame, and this would be a yeah, this is Yusef. We have the swing, low, okay, so let's see. Yeah. negatively pairs. U stuff from AU. It would be a you would want them to mirror each other for you to say, hey, there's divergence, meaning from low to high, and it's going to be low to high, and you have to use the opposite. Some sort of, you know, let's see. So using the bottoms. But really not to use the tops. Now if you use the tops, here and here, you use the bottoms. There. And that's divergence there. Now, what I'm still trying to figure out is in these types of divergences, when they're negatively you know, when they do the opposites, when they're mirrored, in general, so here we have the divergence, and this is the divergence charts, you know. So bullish is you're using the bottoms. It's divergence, and it's the bottoms. It's bullish. Bearish if you're using the tops. But that's with pairs that are you know, these are pairs that coincide with each other. Okay. So this is on the top right now. And I noticed the previous time the dollar, when I used the top for the dollar, it ended up being, you know, a bearish move that had occurred. And at the moment, you know, this is a divergence that occurred here. I mean, this is not even, you know, you have, it is a swing, but this is pretty ugly. But in any event, over here we did have some divergence here, and then price, you know, this is a 15-minute chart, and then price eventually went higher and is dropping now. So this might be the time that it will make a move down. Go to a higher time frame. Get some time for this to catch up. Okay. guess it's done. Okay, so for here we have a high and a higher high, and here we have a low and a higher low. So even on the hourly is divergence that had occurred up here. And using the tops, but of course remember this is this is inverted. And on the tops, it's usually bearish. So I don't know if the dollar will be deleted, but again, once I used the dollar and put it on the top, and it made its move down. It was bearish. Usually takes time, a number of hours before the next big, the big move occurs. So this went higher. This may be about to go down because of the divergence over here. Get down to the 5, see what's happening here. And we'll just let it roll like this. It could come all the way up to here. This move here will be like a turtle soup. Bounce back down into the range and pop out here, drop. But again, this is gambling because of the, this move came down and slammed into PDarray already. So, alright, so I'll leave this and let it roll. I'm gonna stop so I can turn off the mic. Okay, so you see that was a gamble and it played out, right? But again, it was just to see and just you do the work, the physical work of dropping the lines and watching price go. Note this strike here. Look at this. 926. 930. See that? So that was 4 pipettes off from being exact. Yeah. Went over by 4 pipettes. Peaked above it. But this was the mean threshold of the order block. And that's where price went to. But again, notice 3 candle pattern had occurred. So on the 1 minute chart, if you were to get in on the pullback, you know, price is striking a PDarray, and it being so close, those numbers are really close like that. It's a good chance it might be in your favor. You know, so
everybody knows
on a 1 minute chart, you know, it pulled back more than 50% of the range of this third candle. Got in and it dropped. So we could look at the timing now. Remember that time was, what time did that occur? 12:45. That happened at 12:45. Okay. You know, at 12:45, that's not the kill zone. But now let's see as price dropped down here and then came up here and hit this here. Let's see what time that occurred. 10:05. 305 basically. So this is the kill zone right here. So it took out the Asian low, Asian session low, came back up, and it respected this here. This here's a high, a low, a low, a high. So this last down close right here is a mitigation block, and this here is a final order block within the formation. So spiked it, okay. Spiked it, and above it. So it made this move, and then it came down, created. So this move here, with the spread, it basically took out stops here, and then it you know, created with this M pattern here. So let me take a look at this here. What time did this happen? 13. What, to 7 o'clock? So this happened 7 o'clock. So this is this here occurred at 7 o'clock. So you have this M structure here. The first leg is in the kill zone, London kill zone. And it swept here, tiny bit, not by much, but it did. We know it's a higher time frame PDarray sitting there. But you know, it made this motion. We know that because of how much this dropped, we know that there's a desire for price to come down low. So yeah. The M structure, it cleared here, came back up, made it cleared here. So it had a lot of areas where it was shown that it wanted to come down. So there you have it.